Gunjan, a lot of people looking at equal weights and stripping out the biggest cap tech. What are you, biggest market caps? What's your sense about what the indices are really telling us right now?
So I think when you look at the index level, the S&P 500 down around 4 or 5%, the Nasdaq, teetering on correction territory as of yesterday and midday trading today. But I think when you peel that back, things look a lot worse on the individual stock level. It gets a lot uglier. I looked at companies across the universe with a market cap of more than $10 billion. And what I found is that more than 200 of them are trading around 20% or more off their highs. And we're not just talking, Cathie Wood's ARK fund. These are S&P 500 behemoths like Salesforce, Netflix, Disney. So things get a lot uglier when you peel back beyond the index level.
So do managers then argue, well, that means that buy signals may come earlier than we expect, or that there's been enough technical damage done to start getting more aggressive on the buy side than otherwise?
So it's interesting. I think we saw a little bit of that this morning, right? We did see tech leading the way in early trading, but that's disappeared pretty quickly. And I think zooming out, it has been such a violent rotation, right? Even beyond just those individual stock swings, you're seeing value stocks outperforming by the biggest monthly margin since December 2020. So I think some traders are saying, we think this move in financials, energy stocks has gone too far and it might reverse. But when you look at what happened recently, tech is now leading the way lower as of now.
Yeah, Gunjan, a lot of, or at least some of the selling has been preemptive. You could argue the expectation of rising rates this year. So I wonder, how important will earnings season be? What do we need to see out of some of these high growth companies to perhaps turn the tide here?
That's right. I think one thing that has happened, and that's been a really big shift at the end of last year and to kick off this year, is that all of a sudden profits really matter. People are looking at these companies that weren't making any money and saying, hey, maybe it's not such a good idea to be in Rivian, Coinbase, some of those other money-losing companies. As the Journal recently reported, a basket of unprofitable companies within the Nasdaq composite was down around 30% since the end of September, while the profitable counterpart had slid around 1%. So all of a sudden, that really matters. And even beyond the unprofitable versus profitable groups, even companies that have been making money like Salesforce, Adobe, investors are taking a look at them and saying, hey, we don't think they're going to grow at the pace they did last year.